Okay. Hello, everybody. Welcome back. My name is Jerome Franks, president of CFA Society The Bahamas. Today is our fourth and last part of our financial literacy series. We'll be discussing the topic, the credit bureau, what you need to do now to protect your credit. Our speaker for today is Schell Stubbs, a well-established professional in compliance, as well as the vice president of CFA Society The Bahamas. So before we get started, one thing I'll say, I think the literacy series has been very successful and very helpful to a lot of people. One thing you may have noticed, one of the recurrent themes in the weekly series is the theme of capital, the ability to access capital, whether it be through budgeting and saving or through amassing your capital through investing, or being able to access financing from a financial institution. In order to build wealth on a large scale, one must be able to access capital, regardless if that's to build a business, invest in real estate, or simply to have a comfortable living. So with that, I think in the near future, one of our biggest enablers or impediments to be able to access capital will be our credit report that will be issued by the credit bureau, I guess, once it's fully established and up and running. I think if our credit report and credit bureau is anything like the United States, it will have a major impact on our daily lives. I think even down to being able to access being able to get a job, or even access getting an apartment, definitely getting a mortgage, of course. It definitely will have a big impact on our lives and our ability to do business. So with that being said, today's discussion, I think, is very important and very relevant. In regards to our regular protocol, if you have a question, please feel free to ask your question at the end. You can type your question to the host using the Zoom chat feature, or you can raise your hand and you can ask your question directly to the speaker. So to get us started, I'll introduce our organization and then our speaker. For those of you who are new to us, CFA Society is an organization of financial and investment professionals. We generally hold or are pursuing the CFA Charter or Charter Financial Analyst designation. Our members are among the top financial and investment professionals within the country. For more information, please feel free to visit our website, cfasociety.org/Bahamas. So, as I mentioned, our speaker for today is Schell Stubbs, and she will be discussing the topic, the credit bureau, what you need to do now to protect your credit.
Great, thank you so much, Jerome. Sorry, go ahead.
Schell is a banker and entrepreneur, has invested 30 years in the financial services industry. She spent more than 25 years at Citibank and held various positions, culminating her tenure as vice president of alternative investments. She served 5 years as director of compliance at Scotiabank and most recently consulted at Deltec Bank and Trust. She has a bachelor's degree in finance and accounting from Pace University, an MBA from the University of Miami, and a master's of law in international taxation from Thomas Jefferson School of Law. She's an accredited trust and estate planner. Other designations include chartered risk analyst, certified anti-money laundering consultant, and in recent years, a level 3 candidate of the CFA designation. Schell is an adjunct lecturer at the University of the Bahamas, where our focus is on the core subjects of investments, credit analysis, and finance. Schell routinely advises national and civic and church organizations in the area of personal finances. Her community service extends into the high school students, and she has led Young Life, a mentoring program for many years. Schell is also the vice president of CFA Society The Bahamas. Thank you once again, Schell, for joining us today, and over to you.
Great, thank you so much, Jerome, for that intro. Almost wasn't sure you were talking about, but happy to be here and so excited about this 4 weeks that we've had talking about personal finances. And we kicked it off with Tiffany, who's a board member, and she did a wonderful job in talking about personal finances. And today we're talking about a credit bureau, but actually it's going to bring to bear a lot of that stuff that Tiffany had to say to us. So we're going to start. If you can see my screen, yeah, everybody can see my screen. We good? I can continue.
Yeah, I can see your screen.
Great, good. All right, so how did we get here? So for years, we've been talking about the credit bureau in the Bahamas. Actually, as much as 30 years ago, this notion has been discussed in the country. And because we're familiar with the US model, we understand what the credit score is and how it works, but not understanding when it will get here and how it will get here. So a few years ago, the IMF and World Bank recommended to the Bahamas government that we establish a credit bureau. And for obvious reasons, they thought it would be beneficial to our economic stability and thought it would get us to the next level as a country as it relates to our banking sector and the way we manage credit in the country. And so in 2018, we enacted laws for our credit. The Credit Reporting Act was passed in 2018. And in 2019, the Credit Reporting Regulation. And so this framework was established to help our credit bureau, to facilitate the credit bureau and the management of this consumer information system. So the central bank was tasked with heading this initiative. And actually central bank is the regulator for the credit bureau, and that's also built into legislation. And once the law was passed, the central bank took the lead in trying to determine who would be and who we would partner with to create the credit bureau. And so a tender offer went out internationally, of course, and CREF was chosen and was licensed in 2019. So 2 years later, 2021, we're actually really at the beginning. And so just to give you some context for how I'm involved, so I would have been, I met CREF and at the end of 2019 when I debated office at Scotia, and I've been working along with them to help establish some stuff on the ground. CREF is an international company out of Italy, and I'll tell you a little bit more about them as we go along. I've been an advisor from the beginning of 2020, and just recently we hired 2 staff members. So it is real, it's live, and we are actually at this point. So congratulations to the Bahamas, we have a credit bureau. So this next slide basically says what's in that regulation and how it impacts. Like I said, central bank is responsible for the oversight. They chose the licensee, and they've established guidelines to ensure that information is dealt with safely and secure manner. And they have the role of overseeing the credit bureau as it go forward. So whilst the credit bureau is not a bank, the government sought to allow central bank to be the regulator for the credit bureau, because essentially we are going to be working very closely with banks. And so the regulation kind of outlines what the central bank is required, what they can do, and what the expectations are. So I want to highlight a few things in the law as well. So in the Credit Reporting Act, it says that us, consumers, we call data subjects in the Act. Anytime you approach a financial organization and you want to get a credit report, or they want to get a credit report, the law requires that they get your consent. So just in case you were wondering, we can't just give out your information. You're going to have to sign on a dotted line and say, yes, it's okay for that bank to have your credit data. And so that's one of the things that was built into the law to protect you, to make sure you're aware and to make sure you understand and you give the consent to allow this information to be sought and used. Some other things in the law I want to highlight, there's a lot in there, but these are just a few things. The credit bureau is really, one of the major things they're going to be doing in the beginning is actually being a part of the application process. So as you approach financial institutions to get credit, they're going to require you to get this credit report to supplement your application process. And it's going to be used for any business transaction involving you and a credit transaction. It's also going to be used to assess the risk that you provide and you present to the bank for collection. For persons who skip tracing, that's if you're trying to not pay that loan, it's going to be help the banks with that as well. And it's also for underwriting insurance. If you were the data subject and you needed a big insurance policy, your credit bureau report will be a part of the process. Some other things that's in there that I was surprised by when I first read it a few years back is that you If you're gonna rent, your landlord could ask you to give them a credit report. And so the government has contemplated that any tenancy agreement could be supported by the credit bureau report. Employment check. If someone wants to hire you, they could say, can I see your credit report, and use that as a reason to go ahead or not go ahead. And so those are just a few of the things that are in there that you may be interested in at this time, but we're going to talk a little bit more about the credit report, the credit score, and what it looks like. So Kraft, like I said, Kraft got the license in 2019. A company established in 1988. They're headquartered in Italy. And actually they're a really well-known company all over the world. So in 35 countries, 70 subsidiary companies on 4 continents, 5,000 professionals working for the company, 10,500 financial institutions connected to it, 82,000 business clients, and 1 million consumers access Kraft services every year. So Kraft, chosen by the central bank and their team, is a well-known and reputable company that's going to be the credit bureau in the Bahamas. And for us who need to know, the name in the Bahamas is going to be called Kraft Information Services Bahamas Limited. So these are some of the places in the world where Kraft is. So like I said, headquartered in Italy, but essentially well-known and a global company. And Kraft has actually done this in the Caribbean. And so we're not the first Caribbean country, they're in Jamaica. So in this part of the hemisphere, they're in the US as well, and they're actually in the Bahamas and Jamaica now. So very familiar with our contacts and how we do business and how we manage credit. And so we think the government made a good choice when they chose this company to be the lead in the Bahamas. So what is a credit bureau? And I know a lot of us may have been asking that question. We have not been exposed to this in a big way. If we travel, of course, we have, when you go to the US and you're walking in Macy's or JCPenney, and they kind of say, come, let's give you a credit card on the spot. And you say, how could they offer me a credit card and they know nothing about me? Well, if you're an American, they could put in your social security number and up pops your credit score, and they can on the spot say, okay, this credit score is good and within our risk appetite, we can issue a card on the spot. So that's one of the reasons we see this happening when we travel. We're not sure if it's going to happen in the Bahamas in the short term, but maybe yes, down the road we'll be able to use our credit score on the spot and to do various things. So we've been exposed to the credit score from that perspective. We see the commercials on TV, Credit Karma, FICO score. You need to understand how important it is. And in the US, basically, there's not much things you can do without a credit score. It's a critical 3-digit number that impacts so much of your life if you're an American. And so now we're going down that path, and it's an information warehouse. So it's not a bank, it's not a financial institution, it's a warehouse of information. And so a lot of people have been thinking that it's a financial institution, especially since central bank is involved. But like the name infers, it's called Kraft Information Services. It's really a data warehouse, a repository of all of your information, your credit payment history. And this information is collected and algorithms are used, and it creates this 3-digit score. And so the intent of the credit bureau is for you to be able to, once you go and apply for loan, which is now legislation, the loan officer in the bank or credit union or wherever you go in should say, can we have your approval to obtain your credit report? And they obtain that credit report on your behalf. They interface with Kraft via the internet, make the request. And once you're in that system, they'll get a report in a few days, and that report will assist in making the decision. So just to be clear, Kraft doesn't decide if you get the loan. The banks decide if you get the loan. The banks use the credit report to determine if you are a risk that they want to take. So I don't want anybody to blame Kraft if they don't get the loan. The banks still have all autonomy to decide who they issue credit to. So how this is going to work. So we have 2 main sides of this equation, and we have the credit information providers, which are going to be the mandatory ones. So if you had a chance to look at the legislation, you'll see there's some mandatory information providers, and those are the domestic banks. The 7 commercial banks that we have here, the insurance companies are in scope as well. Financial and corporate service providers are in scope. The credit unions definitely in scope. Bahamas Mortgage Corp, Bahamas Development Bank. These are all the mandatory persons that have to sign up because it's now law. So whether they sign up in the first few weeks or first year, they eventually have to sign up because it's a part of the legislation framework in the Bahamas, and it'll be illegal if you don't. There's also this provision in the law where the central bank governor, by designation, can announce in Parliament and declare that you are going to be in scope. And so by designation, the utilities companies will be in scope: Water and Sewage, BTC, Cable Bahamas, BPL, the Supreme Court, NIB, Department of Inland Revenue. So all of these institutions can eventually, and probably eventually, will be a part of scoping out, and that would be once the central bank has made that proclamation and gazetted the fact that now information from the inland revenue will be a part of the credit score. So in the first instance, in the first year, they might not be a part of your score, but essentially the opportunity exists for the government to determine at the right time when to allow these data points to be a part of your score. So understand that everything you do, we're going to be like our partners in the North. It's going to be your financial transactions are probably going to be captured eventually in this credit score. So the other side of the equation is the information providers. Like I said, the major players are the banks, and they have some responsibility legally to provide that information in a secure manner, reliable, accurate, current information. And they have an obligation to instruct the credit bureau within 5 days if they discover that they've made an error of they've given them information that is not correct on you. And so they have that responsibility to follow the law and make sure that that information gets to the right place and gets there accurately, safely, and your data is protected. On the other side of that equation is the credit bureau. The credit bureau legally has the responsibility to ensure that the files that they receive have been checked. There's a pre-validation check. There's a check to validate the stuff, the data that they're receiving. CREF has invested quite a bit financially to ensure that we have the right systems and their database so that they can capture that information. They've had test data from most of the banks, and that information is, once they receive it, they have a responsibility to ensure that it's correct and that it's uploaded in a timely manner. And once it's get uploaded, the algorithms in that system will create your credit score. So need you to know that CREF and the CIPs take care of your data. And I know a lot of people have some anxiety about your information and your business being out there, but CREF has a legal obligation to ensure that your data is secure. So just want to make sure you understand that, and they understand that, I'm sure. And so this is just a picture of how it's going to flow. So those blue bubbles at the bottom are really the financial institutions that will be given that information over the credit bureau, and they're going to interface with a front office operator who will upload that into the system. And of course, you have the credit bureau database. And then, of course, you go to, on the top side of it, you go into the bank and you make an application, and they get you to sign. They say, hey, give consent, and they'll make that request to the credit bureau database, and they'll have your credit report. And so these are the steps here that have to be taken. This is a different way of looking at it. 5 or 6 steps from the start to finish so that your data gets to credit bureau and then back to the bank. And of course, the old saying, garbage in, garbage out. So if that information is good, if the banks have done a good job of capturing the data points about you and about your credit transactions and how you've managed your debt. Of course, like I said later on, the utility companies as well. If we get good data in, then we're gonna we'll get an accurate score out. And so everybody understands how that'll work. And so everybody's been testing and ensuring they understand what's required. And like I said, later on in the year, we're gonna get to the point where we put in all those other service providers, and that information will go through the same process, ensuring that we have good information. And now the credit report. So all of you are excited to figure out what is this report gonna look like, what's gonna be on it. So of course, it's gonna have all the personal information, your name, date of birth, and of course, the identifier for us is the NID code. That's a unique identifier in the Bahamas. And you have those 4 data points that will be the unique identifiers: first name, last name, place, date of birth, and your NID. So those 4 data points will be the critical elements to ensure it's you. And so once you've passed that, they'll have your other information, your address, your contact information, your employment data. So all that's going to be in the credit report. If you're a sole trader, of course, it'll be the business name, the registration number, VAT, TIN number, all legal entities, of course, legal name, legal form, registration number, VAT number, TIN number, address, etc. So that's going to be on the subject. So you're calling us data subjects, and on the credit report, the data subject, this data will be there, so that when you make the request, we're making sure that we have the right person and they're giving us the right information. Also on that report will be how you've managed your credit in the short recent times. So it'll give you all the loans you have, the start date of the loan amounts, the frequency of your payments, the collateral supporting that loan, the past due amount, the past due days, and any way you've managed those loans in recent times. So that's going to be a part of the credit report. There's also going to be a section called inquiries. So if you've asked or you've approached 5 banks in the last month or 2 for applications for a loan, the amount of inquiries will be on your credit report, and that's not a positive thing. So banks and credit scores in the international arena do the same thing. If you're always looking for a loan, they consider you to be a chronic borrower, and so that's not a positive thing. And so information about the amount of inquiries you have is something that banks are trying to know, and that factors into your score. And then links between you and your co-borrower or joint account holder or guarantor. You may sign on a loan for somebody, or you may be in a joint account with somebody. All those links will be on the credit report as well. And then any additional information, negative information about you that may affect and impact your score. And we're going to talk about that a little later. So the credit report, so this is a sample of what it's going to look like. And I basically said that personal subject data information at the top. And then your address, your contact information, your employment data at the bottom. And then on page 2, the section deals with all of the contracts you have, when you got the loan, what's the amount of the loan, how much you agreed to pay, the start date, the end date, the last payment date, the next payment date. So all of this information about your credit facilities will be on that credit report under the section called contracts, which will be your installment loans, which is usually your mortgage and your consumer loans, your non-installment loans, if you get some line of credit, your credit cards. And then, of course, there's a section there that's also for what they call the utility section services that you have that will be a part of that. So once we get to getting the utilities and scope, and once we get to inland revenue, do you pay real property tax? All that's going to be on here. If you pay cable on time, BPL, anything that where you pay a rent on time, all that information is going to be in this section. So the credit report could potentially be a few pages, and this is just a sample of how that is going to look. And just a note, also in the legislation, there's one opportunity for you to have a free credit report every year where you can just kind of approach the credit bureau and say, listen, let me see what I'm looking like. Let me understand how I've done this year, even if you haven't made an application for loan. So the intent is usually only get a credit report when you go to apply for loan, because of course it's going to be a cost pulling this report, minimal cost. I don't think it's going to be more than $15, $20. I don't think the banks have decided that yet. But once you go to get your loan, you're gonna have to pay that additional fee so they can pull your credit report. But once a year, the government is built into the legislation, you can approach CREF and say, can I have my credit report? And that's a freebie so that you understand where you are. So I just want to let you know that. So this is how it's going to look. You're gonna have this 3-digit number that's gonna be so impactful. And the number basically gives an indication of how you've managed your score. So if it's going to be from 200 to around 600. If you're around 250, then you're going to be considered in tranche J, extremely high risk. And so when you approach a bank and you're in the J category, the banks may not want to give you a loan. Depends on their risk appetite. If you're around 500, you're going to be on the A tranche and you're going to be considered very low risk. This is risk of default. So very low risk of default, and the banks are going to want to give you a loan because they're going to know that you're going to pay back. So this scoring mechanism, all of us will fall into one of these buckets once a credit bureau goes live and the data is compiled. And so you want to try your best to manage yourself in the ABC tranche. Because, and not to say that you won't get loans if you're in a lower tranche, that is totally up to the banks. The banks can have a high risk appetite and say, you know what, We will give people who are in H category a loan, but they're going to pay 30%. So they will have that opportunity to charge how they want, depending on how you're risk rated. So this 3-letter score is going to impact the way you are viewed as it relates to your riskiness for repayment of your debt. And there's some exclusion rules that may have come onto your credit report, and I'm just going to go over a few of these. So you may not have any contracts. Some persons don't have debt. If you don't have a mortgage, you don't have any debt, then you apply for a loan, you decide that you want to get a loan, and there's no information on you, then that there'll be an exclusion rule in the report that says the subject has no contracts. Or it'll say the subject has just been inserted. So you just started a month before, or you just got a credit card a month before, and now you're approaching for another loan, and there's going to the exclusion rule could say the subject has just been inserted, so not enough data to provide. Or I could say the subject only has service contracts, no loans, they only pay their utility bills. Or I could say that the subject has a guarantor that has a bad credit score, not on them, but on the person who they signed a loan for. Or I could say that you've closed all your contracts in the last 3 years, and so that's why there's no credit report. So there are going to be some reasons. Not everybody's going to automatically have a score, and this list of exclusion rules will kind of indicate why you may not be scoring in the credit bureau. So just want you to kind of understand how it's going to work. And if you have any type of credit facility in this upcoming year, you probably will have a score unless you fall into one of these exclusion rules. All right, and this is where we're going to spend some time, because this is what is going to impact your score. And like I started off saying, Tiffany gave us a wonderful insight on how to manage our money. Well, this is a direct result of how you manage your money. So whilst we have been so casual about what we do and don't do with our money and how we spend and how we pay our bills, it's going to have a direct effect on our score. And our score is going to determine how we do a lot of things, even possibly getting a job, like I mentioned earlier, or being able to rent, or being able to get insurance. So we need to understand that this is a brand new day for us, and we're going to have to start to manage ourselves accordingly. So I'm going to go through these risk assessment factors. These things are going to impact your score. So not only how you pay, but some other things that I want to zero in on to help you understand today what you're going to have to be thinking about, where you may need to make adjustments, and what you may need to be doing now, so that when the scoring happens, you'll be in a good place. So extensions. Extensions is that notion that there may be other information out there on you. Now, bankruptcy is one thing that we don't really. Bankruptcy has been on the laws of the Bahamas since the 1800s. 1958 is when they redid it, and they've not looked at the bankruptcy law since. We have bankruptcy laws, they're not used. In the US, bankruptcy laws are used at the drop of a hat, because if you have a credit score, you can't pay your bills. A lot of Americans say, you know what, I declare, I put my hand up in the air, I'm going to file bankruptcy. File Chapter 11, Chapter 7, or there are 5 different chapters in the US. That gives them a chance to start over. So in the US, you could file bankruptcy, start over, your score gets wiped, and stays in the report for 7 years, and you get to start a clean slate. We have bankruptcy laws that we've not used. I suspect that we're going to have to start using them now. In fact, there was an article in September about us having to redo bankruptcy laws around personal finances. So maybe this is a new day, and we're going to be looking at those bankruptcy laws, and it'll be a thing in the Bahamas once the scoring really kicks in. Legal procedures. That's an important extension that will affect your score. If you may not have any loans, or we may not know that you have any loans because you have not gone to any financial institution to ask for a loan or have a credit card. But there can be a legal proceeding out there on you. Someone could have sued you. You could have been a part of a divorce where the judge said you have to pay $2,000 a month, alimony and child support. That's going to affect your finances. That's a legal proceeding that would impact your score once it's known. So how we manage a lot of things will affect our credit score. And just want to make you aware of those things. So as you move for the next rest of your life, you're going to be mindful of these things that will impact your score. The next section is linked. Who you link up with is important. I've been teaching credit at UB now for the last 16 years. And I always tell the kids, when you fall in love, don't get nobody to force you to sign no loan with them. Be careful if you sign, co-sign a debt or agree to be the guarantor on the loan, the bank comes to look at you. Now, when you're married, that's a no-brainer. You're in scope. But if you're not married, don't take it light signing a loan with somebody being a co-signer or a guarantor. And I know, and I used to tell the kids this, you know what, you fall in love, but you don't fall in love when you have to sign no loan. You sign maybe for your mommy, possibly for your daddy. But when you're getting ready to sign on the dotted line with someone who's getting credit, who can't qualify on their own for whatever reason, understand full well that you're linked to them and that's going to impact your score. So it's not as casual as it used to be in the past. It was always serious because if the person doesn't pay, the bank comes after you, and the banks know that you have that bad loan on the book, and so you were still impacted. But now I think it's going to be clearly obvious to everyone because the credit report will indicate who you've been linked with and any bad debt that person may have had that impacts you. And I have a funny story. A friend of mine, a Bahamian girl, lived in the U.S. and she graduated at the same time with me and stayed in the U.S. and had a baby for this guy. And we said, girl, when you get married? And she said, girl, I can't marry him. His credit score too bad. And he was like, what? She's like, no, when I marry him, I take on all his credit score, all his debt, all his burden. So she was okay with having a baby for him, but not okay with taking on his credit score. So that's how serious it is in the U.S. And I suspect that for us, it's probably going to be just as serious because you're going to be impacted in a financial way. And it could prevent you from getting that mortgage that you want for yourself or doing anything you want in the future. Opening that business because you don't have access to credit because you've been tied or linked to somebody that hasn't done a good job with their finances. The next category is for behavior. And Tiffany spoke about this on her presentation, how we manage our money, what we buy, what we don't buy. We need to be mindful. We spend a lot of time buying our wants and not focusing on our needs. We're going to have to fix that because for you to be able to pay your loans on time, you're going to have to understand what you make and only spend what you could afford and only buy the things that you need if that's what is required for you to be able to pay your loans on time. The credit bureau, the scoring is going to require you to be on time with your payments. And a lot of us do not understand that. My mom always says, well, how come they charge me late fee and I pay in February? I said, well, when did you pay? She said, well, I paid on the 28th. I said, when was it due? It was due on the 15th, but I wasn't late, but you were late. Not because you paid in that same month means that you weren't late. We are very casual about stuff like that in the Bahamas. If it's due on the 15th, you need to pay it on the 15th or before. You cannot say to the bank, why are you charging me? And I paid only 5 days later, it was in the same month. So we need to understand that our behavior is going to impact how we are scored and how we are viewed by the credit bureau and by the banks go forward. The liquidity risk. So this is how much money you have left over to pay these bills. And so we're going to have to factor this in as we make our purchases every week and every month. How much money we're going to have left because, the debt service ratios would be the banks use to kind of gauge what money you're going to have left over after you pay service or your debt on a monthly basis, considering the salary you make. So this is a liquidity risk. How much money you're going to have left over to pay your bills. And one of the things I learned, all of us learned, I hope, during COVID was that you don't need all the things you think you need. We had that entire year of not being able to spend money. Even if we had to spend, some of us, we couldn't go. You wanted to go to eat, there was no restaurant open. You wanted to go and shop and buy stuff, the stores weren't open. So we understood during that year, it was a wonderful year to teach us that all the things we think we need, we really don't need. And we can do without a lot of stuff. And I was thinking about actually today as I was kind of preparing, I thought like Sunday's Mother's Day, last Mother's Day, we were locked down. And I remember sitting in the front of the TV and I had on a big t-shirt. I said, boy, I had been in church, dressed up, big hat and dress and spent up all my money looking good for Mother's Day, out to a restaurant, can't do none of that. But it's okay. I'm home, I have food, I'm fine. And so COVID taught us that all the things we kill ourselves to get all the money we spend, we really don't need to do it. We were fine. None of us died because we didn't have a new dress on Mother's Day or couldn't go out to dine last year. So we're going to have to adjust our behavior and understand that our liquidity risk is one that's going to impact our score, and the ability to pay our bills and pay on time is going to impact our score. The next category talks about potential exposure, and this is the number for requests. So if you have a lot of credit cards and you have a lot of limits. And you know, we get so impressed when the bank calls and say, hey, I just increased your limit to 10,000. We say, oh boy, they love me. They just give me a new credit limit. I went from 5,000 to 20,000. We're so impressed. That's not really impressive, because if you have 10 credit cards with all that limit, you could at one swipe or 2 or 3 swipes possibly have exposure of 100,000. So that potential exposure is what's going to impact your score. So having a lot of credit cards with a lot of limits is not necessarily a good thing. You only need a few of them, and you need to manage them well, and you don't need all the exposure you think, all the limits that you need. And then, of course, your current exposure, how much money, how much is outstanding on those credit cards. So you have a limit of 25,000 and you've already used 20,000, then your current exposure is high. The person with the least exposure has a better credit risk. And so that's going to factor into your score. And then, of course, any negative information about how you've defaulted, how many late payments you've had, how many times you've not paid the entire mortgage payment, just paid it partially, how many times you've the banks had to call you, you've gone 60 or 90 days in delinquency in arrears. So those are the things that are going to impact your score. And I wanted to just emphasize these things because we're going to move away from today kind of understanding what's at stake for us and what we're going to do to change our behavior, so that when these scores are generated in the near future, very near future, we're going to be in a good place. That credit bureau tool is also going to be a monitoring tool, and it's going to be a monitoring tool for the financial institutions and also for the bureau. If you have a change of address, that's going to be noted. If you change your telephone number, if you change employment, if a new loan is dispersed to you, all that's going to be known. And those are called trigger monitoring tools. If you go into negative status, 60 to 90 days past due, it's going to be known right away. And if you request a new contract with anybody, that's going to be known right away. If you change a role where you decide to be guarantee somebody loan, or to be a co-signer, or to be a co-depositor, loan facilitator with somebody, the change in role would be noted. The types of loans you get, the amounts you finance, the application dates, all of these are going to be known with the new credit bureau monitoring tool. So just so you're aware, your information is known. The benefits. I know a lot of us breathing hard, like, wow, what are the benefits of this? What are the benefits to me as a consumer? Well, I think it really is a good story. Whilst I've emphasized what you need to do and how you need to change, I really do think that the credit bureau is going to be a positive thing for us as a country, and specifically for us as individuals. So one of the main factors, I think, is the fact that we're going to change the way we behave, and so we're going to reduce our indebtedness. So if you understand that having a lot of debt is not a thing to praise, then that's going to help us be more financially responsible. So that's one of the major factors that will impact us as consumers. A second one is that if you get a good credit score, and let me just be clear and kind of backtrack a bit. Banks have always been scoring you. So if you think that this is new, it's really not new. When I've taught credit, the 5 C's of credit are known. Banks have been analyzing you on these 5 C's from the beginning: character, capacity, collateral, capital, condition. They've always been analyzing you. But what happens is each bank analyzes you different. So you may be an A credit rating to Scotia, and you could be a C to Royal, because the banks are using their own internal methods and they're using their own algorithms, and they're looking at just their client base. So they've always been risk rating you, and they have to do that because, truth be told, we are depositors. We put our money in the bank and they lend it out, and we're hoping that they're lending it out responsibly. So they just couldn't really just give the money out to anybody. The banks are in a business to protect us, give us interest, and to pay their bills, and they make money. And so they have to use our deposit money with the care and attention that they should. So they just weren't giving out loans. They were risk rating people and deciding who qualified for them. So, sorry, somebody mic. Right. So the benefits to the consumer now is that we're all going to be on a level playing field. Everybody is going to have the same score. So it's not going to be who I know or what bank I went to or where I work or how much I make. The credit score is almost like a leveling field. It's an objective view, and it's going to impact you. Some persons who may never have been able to get a loan, it's going to allow for social inclusion, allow access to some persons who may not even be, may be considered unbanked, but you've paid your utility bills on time. You have a good track record of paying cable, Bahamas, BTC. You could demonstrate that. The banks say, oh, wow, this person's done well with their utilities and they paid their bills on time. They can be an opportunity to give them a loan. When ordinarily, without the credit score, that opportunity may not have existed. So I think for social inclusion, for persons who may not have had access to credit, And access to credit is critical because it gives you an opportunity to build wealth. It gives you an opportunity to achieve some things. So don't underplay the access that this new credit bureau will provide for persons who may not ordinarily have been considered. It's going to be a more precise evaluation. It's going to hopefully allow for better services. You should have a lower collateral. If I'm an A and you're a D, I shouldn't have to pay the same down payment or collateral as you. I should be getting a better rate if I'm an A and you're a J. The bank may charge me 3% and they may charge you 20% just because I have a better rate. So it is intended to benefit you as a consumer, and that's why we're going to work hard at having good credit scores, because we can see these wonderful benefits that I've just listed. Benefits for lenders. Of course, the lenders, they're going to love this because they kind of have a window into who you are. Nobody wants to give a defaulting loan because everybody loses with that, especially the banks, especially us who've invested in the bank by our deposit base, and because we bought those shares. And if that bank has a lot of delinquent loans, the bank profitability is reduced. So it's going to benefit the lenders for the fraud prevention, proactive collection of demand, debt collection. You could understand by the trigger event who may be default because they've had a 60-day non-payment, and so you could kind of proactively get to dealing with that client. You can reduce your overall cost because the least amount of delinquency, the bank is more profitable. They don't have to pay collectors to chase you, to run behind you, to call you 20 times the money. They can reduce costs. The bank will be more profitable. They can increase the data quality on you and all the subject data subjects in the country, so they understand lending patterns and they can determine what risks they're willing to take. So the lenders are really going to benefit, like the consumers in this new credit bureau situation as well. And of course, the financial system in the Bahamas. We understand that our banking system is a critical part of our economy. We understand that the banks are a critical part of the economy, and every economy credit is a critical part. And so if our credit system, our financial system is stable because we're giving loans to the right people and our delinquency numbers are low, we have a better financial stable system. And of course, that means our economy is more stable. And so we understand the debt crisis that happened in 2008 in the US, even with the credit bureau. And we've really been kind of living on faith because we've not had any major crises around credit and debt delinquencies, which is a result in the collapse of our system. But with the credit bureau, hopefully the entire system is going to be stronger, more supported by persons who are able to get loans and support those loans. And that's the end of my presentation. So questions, I'm sure you have a lot of questions. Or you don't?
Yes, good evening. My question being, considering the pandemic happening last year, would that be a matter of consideration, or would that weigh heavily on credit score moving forward?
So actually, that's an excellent question. I was on a program last week, and that was a question that two people called in and said that's their concern. I think the plus is that the pandemic has happened, so it's behind us. So we get to move forward. So we're starting now with that in the back of us. It's in the rearview mirror. How we manage it, go forward. It's going to be a decision that's made by everyone. And so some of that data could be tweaked to give the best result for everybody. But the good thing is it's behind us. Now, if it happened next year or 2 years down the road, then I think it would have been a different story if the credit bureau already started. We have not gone live with credit reports yet. It's our history. And so we have the ability to kind of make some adjustments around that. So I think actually it's a plus that it happened last year and not next year. Just my perspective on that.
Thank you.
Any other questions?
Hi, Schell.
Hi.
It's Nakira. How are you?
I'm good, thanks.
Good to hear your voice, and thank you for the presentation. I just wanted to ask a question. I heard you mentioned, one of the benefits being around the ability to have a little bit more broad perspective in terms of financial inclusion, those people who may, pay the smaller bills more frequently and proficiently, but be unbanked, like the cable, telephone, that kind of thing. I'm just wondering, like, when will all of that be incorporated? And I guess just to piggyback off of Maki's previous question around, what consideration will be given for the number of people that remain unemployed.
So, so the first part of the question. So in this first year, I'm not thinking that we're gonna have the utilities up and running as a part of the score. Essentially, last year was the scheduled time for the credit bureau. Of course, we had the pandemic. No one has been able. And the reason I'm doing this presentation alone, actually, just to say, the persons in Italy thought they would be here, can't travel. Italy went back on a lockdown, and so we've had some delays. But I think, like I said earlier, delay around the pandemic being behind us, I think that's a good story. I think hopefully the economy will open up, we'll get stronger, people will get back to work. And so we can start fresh with building our credit score. So your question about the unbanked and persons who may do well with their utility bills, once those numbers start to flow, you will have opportunities to be able to give loans to those persons who demonstrate in some other area that they can manage their money well. So while they may not have had a credit card or may never had a loan with one of the commercial banks, if they've done well in some other areas, their tenant, their landlord information says that they paid rent for 2 years without missing a date or out being late or not having a late fee. All that will factor in, and that will allow you as the bank to see some other people that you may not even have considered before and have an opportunity to give some new loans. And at the risk appetite that the bank is comfortable with, some banks will say, you know what, if you've never had a loan, I'll charge you a higher rate, but at least I'll give you a chance. Prior to this, you may not have even gotten that opportunity. And so I just want to kind of give another story about that in India. There's a rural area in India where persons didn't have the same kind of credit score, and they used a cell phone as a way to understand how persons pay their bills. So when you top up, how long you allow before you top up, how quickly you top up, were all dynamics that they used to assess your credit score, and they were able to give loans to this rural area, and persons were able to get out of poverty because for the first time they were able to start a small business with a small loan or be able to buy a house and do things that were never open to them. And so that project actually supports the fact that the credit bureau and the credit score supports access and giving new people opportunities to build credit and build wealth. I hope I answered your question, Nakira.
Thank you, Schell. Just wanted to point out as well that there are a couple questions in the chat.
I think someone on our team is managing the chat.
Yeah, I'll field you a few questions we have from the chat. Firstly, when is the estimated start date for the implementation of credit scores?
Okay, so the credit bureau just, like I said earlier, I've been part of the advisory team. I've been the only person advising them other than the central bank locally. But in April, they hired 2 people. So they have 2 staff members and a physical presence. The next steps have to do around all of the commercial banks, getting all the information to them and signing up all the contracts and getting the legal part of it going. And as soon as that happens, then the information will move from the commercial banks to the credit bureau. So I am my best guess is probably third quarter. I'm not sure if y'all are hearing the feedback. Could we mute? Someone need to mute their mic. Right, sorry. Yeah, so I'm thinking, I'm gonna say third quarter, hopefully, as they tie up all the loose ends around it, getting contract signed and information moving from the commercial banks to the credit bureau. So I'm gonna say, that's the end of year. Worst case scenario, best case scenario around September, I'm saying, but they're up and running and functioning.
Okay, thanks. So to piggyback off of that, I guess, what period will they start recording financial information from? So I mean, are they taking all your information from 2010, 2015, or when?
So they'd asked for 2 years of test data. And so that's still determined if all of that test data will be used. But it was originally thought that they would go back 2 years. But like I said, given the pandemic, that may be adjusted. But they wanted 2 years of test data to determine if it was going to function and how the scores would look. And so they've been requesting that from the data providers.
Okay, thanks. Also, are foreign currency loans to non-residents going to be included on reports?
So the banks are going to turn over the entire loan book, and if you have a loan with the bank, you will probably be included on the report. Whichever US dollar, you mean US dollars versus B dollars. I think
Correct.
they will vote, yes. But I
Okay.
can get, that's something I probably need to check to be sure. Someone can email me on that question, I'll confirm. But I think it's the entire portfolio, because there are Bahamians that may have some US facilities as well. And of course, some of our credit cards are US credit cards, even and B dollar credit cards. So I'm thinking is that it's probably going to be both currencies, but I can try to get that answer concretely. So that person can reach out to me on that.
Okay, thanks. So next, we have another question. This one regarding, I guess, consumer protection. Will there be a cap on how much banks can charge an interest on loans to person with bad credit? For example, 20% to protect consumers from predatory practices?
I think, and I'm trying to remember, I know there was a case way back. There was one, the insurance company is no longer in the Bahamas, but they were charging enormous rates. And there was a case in court that ruled against usury, they call it, where you could take advantage of persons. So I don't think persons will be able to, the banks can do that legally, charge you 20, 30, 40%. There was an insurance company that was charged with doing that way back. So I think there are some guidelines, some laws in our books that prevent that. But essentially the banks can and will charge the low credit risk a different rate from the high credit risk, which they've been doing. So if I've been working for 30 years and I've paid off a mortgage, they may be charging me 2%, and if you're just starting, they may charge you 10% for the same facility, and that's always happened. But I'm sure they're not going to take advantage of you in that way, because I think there's a law in place that prevents that.
Okay, thanks. Another question. I guess I know in the States, every so often, sometimes they may change the way credit scores are calculated based on consumer spending and saving habits and whatnot. So do you anticipate that at some point they'll have a regular review period where they think, or where they consider changing the formula for calculating the credit scores?
Now, the formula right now that is being used is algorithms that's built in, and it's one that's been used across, I think are closely aligned with what they're doing in Jamaica, and I think it's tweaked according to your country. But I'm not sure that the legislation doesn't have a clause in it where it says that the credit bureau have to review the scoring. But the central bank is, like we said, is the regulator, and I'm sure if that becomes an issue, they can kind of direct the credit score to be adjusted for our population and for our consumer base.
Okay, great. I don't see any additional questions at the moment. So wait, hold on 1 second. Sorry. Yeah. All right. We have one last question, I guess. Are any designated data providers participating from inception?
So from inception, it's going to be the 7 commercial banks. And then the credit unions, and like that list that I had a few slides down, the mandatory persons, credit unions, Bank Bahamas Development Bank, the 7 banks, the commercial banks. Those that are what they call in the mandatory categories, who are signing on as we speak, and who CREF has been in discussion with for the last 2 years, giving information, helping them get to the right documentation and all that wonderful stuff. And so they're going to be the first person signing on. And then once the governor of the central bank decides that, and I think he's probably in the short run going to gazette some additional information providers, which in the first instance may be the utilities companies, and I'm not sure if it's going to be the cable and BTC or PPL and water and sewage. I think it's probably going to be cable and BTC first, but that's not going to happen in the next few months. So I'm thinking maybe by year end, that information will begin to flow into the credit bureau database.
Okay. We do have some more questions. How does the consumer protect themselves from incorrect information on their credit report?
So once you get their credit report and how it's supposed how it's supposed to work is that once you go to approach the bank and say, I want a loan, and you sign a consent for them to get their credit report, and they come back and say, oh, we deny, and you say, why? And you say, well, something in the credit report, they could look at their credit report and there may be an error. If the banks discover that they made an error, they have 5 days to tell the credit bureau and it gets fixed. If you discover it, you tell the bank and they have 5 days to tell the credit bureau that they made a mistake and the information has to be fixed. So you get to look at your credit report to see if it makes sense because everything's going to be on there. So if you see where they telling you, oh, you have a credit card, you say, I never had a credit card from Royal, or I never had a loan with Commonwealth Bank, and that's an error that's on the report, you could identify that, and the banks have an obligation. The law makes it a responsibility of theirs to inform the credit bureau that there's been an error.
Okay, thanks. We have 2 people raising their hand to ask questions.
Sure.
First, Charlene Lewis Small, so I'll let her unmute herself and ask her question.
Okay, hi, thanks. Schell, good presentation. Couple of questions in terms of the I think you call them data providers or information providers.
Data providers.
I recall seeing hire purchase companies on there, so that's like your Furniture Pluses, I assume. But does it also, or is it anticipated to also cover landlords? I think you mentioned that.
Yes.
And then where do Payday Lenders fall?
So actually the payday lenders, those small loan companies, they're actually in the first scope.
Oh,
So,
okay.
yeah. So the higher purchase Furniture Plus and all those people that did do the wonderful salary reduction that keep us broke, they're going to be in scope, but not until the central bank gazette do gazette on them. So we're not sure when that'll happen. But the lenders, the small loan people who are giving loans now, they're closer up. So they'll be as soon as the first set of data providers, the banks and the credit unions happen, then those other small loan lenders will be, they're already in scope and they're already in discussion. They already have an agreement. It's just a matter of them signing off and the data starting to flow. So they're actually in the first wave.
And did you say landlords are going
Landlords
to?
later on. Landlords are later on.
Oh, okay. And I think you mentioned about sole proprietorships, but what about, let's say, regular companies? Will they be covered, or how does that?
What I think I mentioned sole proprietors when you were talking about a credit report. So if you were a sole proprietor and you went to get a credit report, it'll have that information on there. Or if you were a company. So I think I mentioned that when I was speaking on what would be on the report. It'll be whoever's requesting that loan, be it an individual or be it a sole trader or a proprietor or a company. So whatever legal structure you have, that's going to be a part of the credit report.
Okay, and then I think my last question is, in terms of the employment data that's going to be included, is it going to be just current employment, or is it going to look at history?
So it's going to be the current employment, and if we agree to stick with the 2 year, wherever you've been in the last 2 years. But it's the same data that, when you approach the bank for a loan, they ask you where you work and they want a job letter. And that's because they've always been credit rating you and they want to see, if you're stable, if you have the character to pay back the loan, if you have the capacity to pay back the loan. So this is just another way of doing it. Once they say, give me a job letter for 6 months, if you're under 6 months, usually you wouldn't even be considered. So that same information that you would give the bank on where you work and how long you've been working there, that's going to be in the credit report. And so what should help you is that you may have changed jobs and the bank would have said automatically no, because you only been on the job 5 months. But if you've been consistently working and your credit score reflects a good, that you've managed your debt well, then it's not as important that you've only been in a job 6 months. But like I said, banks have had to find ways to risk rate you. And that was one of the methods they use to do this 5 C's of credit thing that we've been talking about and we've been learning about. So that might actually help, but it's going to be on your report whatever on your loan application, it's actually going to be into the database and be reflected on your report. And if you're only going back 2 years, if you've been on the same job, then that's all you're going to see. You won't see a history. But if you change jobs, it's probably going to be on that history. And that's the information you would give the bank. Because if you tell them, I just started this job 3 months ago, then they say, well, where did you work last year? And so you give the bank that gets filtered to the credit bureau as well.
All right, thanks. I'll just put it on the record. I'm a bit skeptical. I only see, I mostly see downside.
You don't see,
with this. I don't see the top tier people necessarily benefiting from this, but anyhow, we'll see how it goes.
the top tier people, meaning that people who may
The
want
good credits.
good
Good
credit.
credit.
So historically, one of the things that I think it's gone, and this is my personal opinion, we have not given access to small businesses and people wanting to start business and get a loan. The banks have only really given, if you're a doctor or a dentist, you can get a loan easy. But if you're in any other type of business, it's almost near impossible. I think this is going to level that playing field and allow access. So Charlene, if you decided you want to do something big and you need $10 million and you have a good credit score, ordinarily you might not have had that access because they might not have been willing to take that risk because you're not in one of those categories that they deem to be whatever they deem them to be. But you might have access now because you have a good credit score. So I think that's an upside for some categories of persons.
Shall we go debate that offline?
Because you really don't need a loan because some people are self-funding too. So may not be an upside for that. That happens a lot. A lot of people who do well don't need to borrow. And so that's part of it too. But if you want to do something big and not use your money, I'm thinking it could be an opportunity. But we're going, I'm sure you're going to call me. We're going to have this discussion.
Oh, yes, I will.
Anybody else? And another hand was up.
Yes, Mr.
Valentino Belvedere. Yeah, so Schell, I just wanted you to comment in more detail on the area of landlord and tenantship. We know in the Bahamas that industry has been a contentious one for years. We all know the laws may be a bit antiquated in reference to that industry. Many landlords seem to think it's more in the tenant's favor. And delinquent tenants seem to get away with murder, so to speak. Being able to be delinquent for months and then a judge would then grant them another month or another month to stay in someone's place who they've not paid for a long time. So my reason for bringing it up is because it's been such a hairy area of industry in our country. I'm wondering how the credit bureau is going to thoroughly manage the information coming in, meaning, if I am a landlord and I'm reporting negative results for a particular tenant, and that tenant now comes to dispute that, what mechanisms are in place to help smooth this out? Because it's been such a unregulated and a messy area of industry, in my opinion. Look forward to your comments. Thanks.
So that's a really powerful question. And I kind of understand totally where you're coming from. And I do think that a lot of the laws have been kind of on the side of the tenant. So I agree with you. But what I think this is going to help with, for example, we rent to people and we have no clue who they are. We ask you if you work or how long you've been working. We ask a few questions, but we've been in the blind, allowing persons to live in our places and having no idea of how they pay or if they're good credit or if they're even responsible. And so I think from that perspective, the fact that I can say to you, before I rent my place, could you please go and get a credit report for me to see? So in the first instance, I think the landlords are going to benefit, even if the law hasn't opened the door for the landlords to give the data to the credit bureau yet. And I think that's all being worked out on how you will be able to report someone that's not done well. But in the first instance, you're going to be able to pick better people. So I think, and that's what I think in the first instance, a lot of people are looking forward to, because you have tenants who So the fact that you could say, before I consider giving you my apartment, can I see a credit score? And you could see, and if you're a responsible person with your credit, you're going to pay your rent. But we wouldn't know that before. We don't know if you're responsible. We don't know what you think about credit. We don't know how you've lived. So if you get a tenant that has an A score, then it doesn't matter that who they're paying to. That person respects the process and is be willing to pay their bills. And so that person is going to give you a little bit more relief as a landlord as you seek to give them rental of your property. Now, as once it gets gazetted and the information starts to flow from the landlords to the credit bureau, that all those dynamics are being worked out and how that will flow and who you will give it to and what proof you will need to support it. And that's why you always have to have receipts. But that was a smart thing to do anyway. But I think they're going to put measures in place, like when you do report me being in your place for the last year, you're going to have to demonstrate that you gave me a receipt for, and of course, how much I paid and the date that I paid should be on that. Of course, there's a lease, and you have to have a lease in place so the persons understand when the rent is due and if there are any penalties for late payment and all that wonderful stuff. And so these contracts will probably be a part of the process, and the receipts, or if you bank transfers, documents to support that the person has paid on time. So there won't be this discrepancy. Well, I pay her and she, because really now that could happen now, and we really shouldn't manage like that. If you have a tenant and you're taking cash, you kind of running a risk. And a lot of us do it, just being, so nice and so accommodating. But this is going to force us to make sure we have a paper trail as we accept money from persons. And of course, the tenant is going to want to make sure we have a paper trail as well to protect themselves. But I think in the first instance, the landlords are going to benefit because they can say, before I lend you my rent, my place, you sweetie, could you go and down the street and get one credit report and bring back to me? So I think the landlords will benefit, and I agree with you. It needs to be some relief in that space for that population of persons.
I agree with you. It definitely is going to be a benefit for landlords taking on new tenants. And it's going to be interesting to see what qualifications are required for a landlord to submit to the credit bureau to influence a tenant's credit report. That's going to be interesting to see. Yeah. Because as we know, we see it in court every day. It's just you say, I say, lots of it. But definitely the leases, the receipts, etc. It makes sense, definitely. Thanks a lot for your response.
Welcome.
Hi, so we have just a few more questions. Is there a period of time where negative items fall off the report, example, 7 years?
So that's not built into our legislation. And that's why I mentioned the bankruptcy law. And like I said, someone had a big article about it in September about how we need to redo that law. It's been on our books for a century, and we've not done anything because it's not been something that we've used. We have winding up laws and how to close down a company, but nothing about filing bankruptcy for an individual. So I suspect that that's going to be some wonderful initiative for somebody to take on and get the powers that be to look at our bankruptcy laws, and so build in the possibility of you being able to declare bankruptcy, have a fresh start, and have it on your credit report for a period, similar to the US. But right now it's not in the CRA, the Credit Reporting Act, or regulations. And it would probably be in the bankruptcy laws if we can get those updated to be in line with our real life situations now. But no one's used those. They've been on the books. It's chapter 69, you can Google it. Pages of information about how bankruptcy should work in the Bahamas, but we've never used it. I only know it's there because, like I said, that was part of the teaching credit, the credit analysis. You need to understand what's on the laws. And so I basically gave it this information. I've read it once, but no one uses it. I don't think this has ever been a case even. But that's something that we're gonna have to fix. Part of our growing pains as we grow up as a country.
Okay, thanks. And 2 questions. Will there be additional information sessions for the wider community? And what is the website for the Credit Bureau, if there is one?
So the Credit Bureau does have a website, just went live for a few days, and that'll be publicized. Like I said, they have staff now, they'll be sending that out. I am part of what I agreed to help with is a similar thing, kind of do a roadshow. So if any of you want me to come to your office or to come talk to your family and friends and church members, I'll be happy to do that to help people understand. I think the education is a big part of this, and people moving away the mystery is going to help this work better for everybody. So I've agreed to assist in that way. So feel free to reach out.
Okay, thanks. I think that's about all the questions we have. Are there any more questions?
It's reducing.
On that note, Schell, can you put your contact information in the chat so that we'll know how to get in touch with you? I'm very interested in having you speak to my Rotary Club.
Awesome, not, okay, let me just go back. Can I just say it, please? Because I don't, well, I guess I could move back to the Zoom call. I don't have to share my screen anymore. Okay,
Go right ahead.
so it's Schell, Schell, Schell Stubbs, one word at Gmail. And then my cell is 424-8067.
Thank you.
Welcome.
Hi, Schell, one more question. One more
Mhm.
question. I guess we kind of joked about it in the presentation, which was a very interesting example about the whole asking, I guess, a potential significant other for a credit score, credit report. Can you give some more details as to what would be the implications if you actually, if one has a really good credit score and I guess their significant other has a horrible credit score? Can you give some more details as to what would be the impact?
Right, so if you, so the only way your credit score will be connected to somebody else is if you sign as a guarantor or you do a co-application. So, and that's, but if you're married, it's automatic, okay? So you know, most loans in the Bahamas, you can't get without your spouse, especially a mortgage. I think we have laws around that. There was a time when you could actually get a loan and your wife or the husband didn't have to know. I think that's changed a while back. But if you are not married, then that's not an issue for you. It becomes an issue if someone approaches you and say, I can't qualify on my own. Do you mind? Would you sign with me? And you sign with them as a guarantor or co-applicant, then when you pull your credit score, you're gonna see them linked to you. And if they have not paid well, that's gonna impact you. So basically, if you're gonna agree to be a co-applicant or to be the guarantor, you gotta make sure they pay, or you gotta pay it because you're on the hook as well. And the credit score would show those links. And so whilst you may have had a wonderful, perfect credit score on your own, you co-sign with somebody and they're not as responsible as you are. When you pull your report, that bad score will be connected to your good score. So,
All right. Thank you.
yeah.
Thank you.
So, and I think just like the US, once you're married, the two kind of probably go together. So, but if you're not, then there's no real way of knowing unless you decide on your own that you want to do that. And so, that's why I caution people, and the banks will come after you too. I mean, that's always been a situation in the Bahamas. If you sign as a guarantor, you don't own that property, the person still owns it, you're not on a conveyance, but you signed a guarantee the mortgage. When that person doesn't pay, the bank will call you, and they have, and they do. And so by the same token, your credit score will be impacted as well. If that person's gone delinquent 60 or 90 days. So you're going to get a call from the bank to say pay up, but you're also going to see it on the credit report. So it's real.
All right, I don't know, Kriston, do we
So
have any more
maybe,
questions?
so Jerome, maybe before we get married, we get be asking for your credit report too. You know how the landlord say, can I see your credit report before I let you in my place? We could always say, before I go down now, can I see your credit report? But
Yeah,
it's gonna be for job. The job is gonna be saying, employment is gonna say, before I hire you, can I see your credit report? That's already contemplated in the law. So who knows? So, that's kind of the wide scope of this. But on a serious note, that's not a part of the law. You don't have to ask that, but employers can ask, certainly, and that's been contemplated.
Is there any other questions?
The last question is, when will the replay of this session become available? And I think that's it.
Okay. Well, this session, along with all the previous sessions, we are preparing it. It does take some editing, and we will supply the information to everybody registered once it's available, which should be not very long, probably within a week or so. So yeah, it will be sent to everybody so that you guys can further review the information. So with that being said, thank you very much, Schell. Excellent presentation. Definitely excellent answers to everybody's questions. Definitely glad you were able to join us today. I don't know if you have any last words before we wrap up.
I just want to thank everyone. I'm a part of the CFA Society, and we really think financial literacy is important, and that's why we've done this third year, right, Jerome? Third year, fourth year, and so we made the effort to kind of give this information out to you, and hope that you will use it. Like I said, Tiffany started talking about how we manage our personal finances, and I ended similarly, and because we think this is important. You can't get to invest unless you have some money to invest, and I think our second presenter said that. So we have been trying to do our part in the country by educating everybody and helping you in any way we can, and we do this because we want to be good citizens and help out. And so we hope you use the information that you've received in these last few weeks. So that's my final. Thanks for joining.
Yes, thank you, Schell. And once again, thank you to everybody who joined us this evening, and to those who have joined us in previous sessions. I really hope that these seminars were very helpful, very informative. I know I definitely learned some new stuff. I think you learn stuff every day, but definitely thank you everybody for the support. I think, like I said before, I think the series is very successful. Please be on the lookout for our next seminar. We're looking to have one perhaps in June, and that will be it for our financial year, which ends in June. So we normally take a break over summer, and then you guys will hear from us again in the fall. So thanks again, everybody. We greatly appreciate it. And like I said before, we will make the presentations available to everybody. We will send you information on how you are able to access the presentations once it's available. So thanks again, everybody, and have a good night.
Thank you. Bye.